9 a.m. in Hong Kong, Shenzhen, and Shanghai. Markets are shut in Greater China, but we're still here. You're watching The China Show. I'm Yvonne Man with Annabelle Droulers.
Our top stories. Asian stocks rise as traders assess somewhat hawkish comments from Fed Chair Jay Powell, who says he's in no hurry to make further rate cuts.
Israel says it's begun targeted ground raids against Hezbollah in Lebanon and defying international calls for restraint.
And President Xi warns of potential dangers ahead in his first speech after Beijing's stimulus barrage as China begins its week-long holiday.
Yes, this Chinese euphoria has been put on break here now that we have embarked on this Golden Week holiday. So yes, we mentioned Hong Kong, China, South Korea markets are closed here today. So you're not going to see that sort of big kind of sort of flows into China here this morning. And you're starting to see that peter out a bit. Look at the Aussie dollar, for example. Iron ore is also in the red this morning. Take a look at the Nasdaq Golden Dragon, what it did overnight as well. Not a whole lot of gains after we saw 8% gains on the CSI 300 on the last day of trading there before the start of the month. So certainly there is a pretty quiet sort of vibe going on here. Gives us time to focus on what Jay Powell said at that conference. You know, not in a rush to really cut rates here. Didn't give us any timing on when the next rate cut could be. So at the end of the day, we did see Treasury yields melt up overnight. We stabilized a bit here in the Asia session, but you're seeing that slightly in the Aussie bond market here as well. And Japan getting a bit of a reprieve here. So dollar yen, given the dollar actually did gain a little bit overnight on back of those comments. Weakening yen helping the Japanese equity market here this morning after what has been pretty volatile since that surprise Ishiba win. You got to wonder, though, this volatility in yen, is it really going to peter out anytime soon? Ishiba's already talking about an early general election in October. You're also seeing JGBs are pretty firm here this morning after we did see those BOJ minutes where one member said another rate hike not desirable. But keep in mind, those minutes are a bit dated now. It was before, of course, this election. Tankan survey also coming out. A little bit of an upside surprise there. So maybe that does also embolden the case for more hikes from the central bank. But in terms of what else we're seeing here today, it's not a whole lot. U.S. futures are pretty flat right now. The dollar's pretty flat. And we're watching, of course, how this goes on. So China futures are obviously seeing declines here right now. And we talked about how the Golden Dragon Index really just eked out some slight gains. But you're hearing more commentary, right? After we hit into that bull market pre-holiday. BlackRock turning overweight when it comes to Chinese stocks on the stimulus outlook here. They said expectations of major fiscal stimulus may come that can prompt investors to step in. Dollar China, 701. We're back to levels above that 7 handle here right now. But we did also get some more stimulus measures out on the property side with Beijing this morning, too.
Yeah, that's right. The city of Beijing also loosening some of its home buying restrictions. But let's bring in Bloomberg MLife strategist Mark Cranfield. And Mark, given we've got China shut and a host of other markets, what's standing out to you most today? Is it what we heard from Jay Powell? Is it that move that we're seeing in Japanese equities? Is it still the China proxies?
Yeah, certainly Jerome Powell is going to take a lot of attention today, although I think traders will be reading between the lines a little bit there. I think what you have to see is some kind of context here. I think there was a view in the markets that they got a victory with the Fed's 50 basis points rate cut. That wasn't really expected. Traders were hoping for it, and I think there's a sense that they managed to push Jerome Powell and the Fed into a bigger rate cut than they really wanted to do. And I think that's the context of what Jerome Powell is doing here. He does not want to be boxed into the situation where he cuts by a larger amount than he really wants to before he's ready in the November meeting. Markets are fully priced for another 25 basis points rate cut at least, and the Fed will surely deliver that. But there still looks as though they might want to go even further than that. By the end of the year, traders are still looking for nearly 3/4 of a basis point worth of cuts. And so that suggests there needs to be another 50 basis points one way or either in November or in December. We do have a very important employment report this Friday. At the moment, the expectations are pretty much that the jobs rate won't change very much. It will still be around 4.2%. But we've seen before surprises to the upside, where the jobs rate has moved up higher to 4.3 or 4.4. It called us out earlier in the year. It could do so again. If we get a number like that, 50 basis points will be right back on the table for the Fed in November, and traders will go for it. The kind of moves you've seen in the bond market and the dollar over the past few hours are really relatively small within the scope of what we've seen over the past few weeks. So nobody will be getting too excited. Really, they'll look past Jerome Powell in a few hours, and they'll be very focused on that jobs report coming on Friday. That will probably be the biggest factor on what the Fed does next and by how much when they meet in November.
Mark, there's a great story in the terminal that talks about, it seems like how people in the U.S. view this China policy-induced sort of rally is that they don't really care about it. They're shrugging it off. We still saw S&P eke out a fourth straight quarterly gain and reach another record overnight, despite these hawkish comments from Powell. How does this look, right? Does this whole China stimulus story only benefit regionally here in Asia, and really we have to separate the U.S. story?
I think it's a bit misleading to say that it doesn't matter for the United States, because it's becoming a global story. So yes, of course, the United States is a huge economy. It's got an enormous stock market, which is doing very nicely, thank you very much, with help from the Federal Reserve. But the fact that China is doing its stimulus at the same time as central banks around the world, in Europe as well, are lowering interest rates, now you're getting global momentum. So China will feed into the overall story. It's an overall benefit for asset classes, particularly for equities around the world, and for currencies linked to the Chinese yuan as well. They're going to benefit as well. So it might, from the United States point of view, it might be marginal, but it definitely is improving the overall outlook for global growth. And you can see from the way in which commodities are moving, the Australian dollar, people are beginning to believe that what China is doing is going to improve the core economy, not just the market's point of view, and that will surely feed across to the rest of the world. If you think of Europe, they're an enormous beneficiary of anything good that happens in China. European companies will surely do very well out of it. So it is a much broader story. Maybe the United States sees a smaller impact than some, but the whole world will benefit if China can achieve growth in the 5% plus area it wants to, and it can boost its stock markets. It's good for everybody.
Mark, I'm curious what you're making of Japanese trading activity this morning, because we've got the Nikkei 225 up around 1.5%. Of course, it doesn't really make up for the near 5% drop yesterday. But that sort of move today, how long do you think that that's going to be in place for?
It's going to be a difficult period for Japanese equities. The fact that they have a new prime minister who on the surface doesn't look very favorable for the stock market. One of his big themes seems to be that he wants to beat deflation. He wants to put it into the background. Well, that will mean higher interest rates in Japan. That lends itself towards him looking more towards interest rate policy rather than helping equities. So that's not very good. The fact that he wants to call an election so early is another uncertainty for markets in Japan. Investors will stand back. They won't want to commit too much money to the equity market when they're unsure of whether he's even going to win this year. He looks promising, but there's no guarantee that he will be the winner. The LDP will get a big mandate out of the election to be held later in the month. So all of that would certainly put off foreign investors. If you're a big international fund manager and you can put your money anywhere, Japan just looks a bit too unclear at the moment. You may well prefer to go to China or somewhere else. So certainly in the near term, Japanese equities are probably going to be very choppy, a lot of sideways trading, but probably biased towards the downside because they're really not too sure what's going to happen post-election. And if Ishiba is confirmed, it probably means that he will support the Bank of Japan raising interest rates. That'll be good for the Japanese yen, not so good for equities.
Mark, thank you. Mark Cranfield, our MLI strategist, joining us out of Singapore this morning. Still ahead, we're talking to Kraneshares Head of International Xiaolin Chen about why they think China's new approach to stimulus could change the game. We talk about the amount of inflows crossing some of these ETFs in the last week or so, more than 500 million or so for KWEB in particular. We're going to talk to Xiaolin more about that. And a reminder, of course, markets are shut in Hong Kong, Shanghai, and Shenzhen. You're still watching, though, the China Show. This is Bloomberg.
October 1st. With the election weeks away, the VP candidates are set to face off.
When we fight, You guys are going to get me all fired up again.
Trust Bloomberg for news and analysis.
So is it style or substance, or maybe both? We'll be hearing from Tim Walz and J.D. Vance in prime time.
Yeah, and the question is whether the vice presidential nominees are actually able to move the needle.
Tune in for the CBS News Vice Presidential Debate simulcast with special coverage starting at 8 p.m. Eastern. Context changes everything.
Israel says it's begun targeted ground raids in Lebanon, escalating a campaign to root out Hezbollah despite international calls for restraint. For more, let's bring in Bloomberg senior editor Bill Ferries. And Bill, at this point in time, a lot of Hezbollah's senior leadership has been killed. A lot of its arsenal has been destroyed. What exactly is the IDF trying to achieve here? And as well, what justification are they going with?
Well, I think you're right, absolutely. The leadership has many of the leaders have been killed. Much of the framework, the structure of Hezbollah is likely in disarray, going back all the way to when those you had those explosions of the pagers and walkie-talkies. Israel says that it is trying to conduct what it calls precise, targeted raids against threats, imminent threats it sees from Hezbollah within a few miles of the border region. It's trying to push back some of those weapons depots, push back on some of the fighters that have been based closer to the border. But the reality is we could potentially be in a new phase of this conflict. You have Israeli troops, even in small numbers, in Lebanese territory now, and that can cause that could cause a number of different things to take place in the coming days. We, of course, are still watching for how Hezbollah may try to react to this, and a lot of eyes on Iran and whether they end up trying to defend their proxies in Lebanon. So very tense moments here as as Israeli troops enter Lebanon.
And we've heard from the U.S. President Biden still thinking that he wants a ceasefire, but it doesn't seem like there is sort of any talks now. I'm just wondering, Bill, is the U.S. losing its influence over how Netanyahu decides on what to do next now?
I think what Benjamin Netanyahu has shown is that he is going to use this moment to try to push back very hard on the enemies he sees, the terrorist groups he sees around Israel, kind of regardless of what the advice is from the U.S. or almost anyone else. I think there's some influence at the margins that the U.S. seems to have, but we've seen time and time again over the last few months calls for restraint, and Israel really seeing it as not that moment to pull back. I think particularly after the killing of the Hezbollah leader and some of the damage done to that group in those earlier explosions and attacks, I think Israel sees this as a time to press its advantage. There are a lot of people out there who think that they could potentially be overstretching themselves between Gaza, Lebanon, and defending against potential Iranian reprisals. That's something we'll have to see in the coming days and coming weeks.
Bill, thank you. Bill Ferries there, our senior editor, joining us out of Singapore with the latest on what's going on in Lebanon right now. And, of course, it is the National Day holiday here today in Hong Kong as well as in China. And really for President Xi Jinping, we heard from him for the first time since, of course, this government stimulus package was unveiled. And he warned of some of the challenges ahead for China. Take a listen.
经过75年的艰苦奋斗
After 75 years of hard work, China's modernization has unfolded a magnificent picture and presented an extremely bright and brilliant prospect. At the same time, the road ahead will not be smooth. There will definitely be difficulties and obstacles, and we may encounter major tests such as high winds, rough seas, or even stormy waves.
我们要居安思危
We must be vigilant in times of peace, plan ahead, and rely closely on the entire party, the entire army, and the people of all ethnic groups across the country to resolutely overcome all the uncertain and unpredictable risks and challenges. No difficulties can stop the Chinese people from moving forward.
And for more, let's bring in our China correspondent, Min Lo. She joins us here right now. And really just talking about the obstacles ahead. It doesn't seem like he was talking about how rocky things have been and maybe some of the economic challenges that China's facing right now.
Yeah, it's a bit of a somber tone that he's taking. He did talk about how there could be still a glorious future ahead for China. That's typically the tone they would take at such speeches, on the national holiday at the Great Hall of the People. But he included this warning about rainy days ahead, having to prepare for that and potential roadblocks. And this is quite a departure if you compare it to his speech 5 years ago at the 70th anniversary of the founding of the PRC. The tone was a lot more upbeat. He talked about how China's future will surely be very bright, and he talked about China's progress when it comes to these socio-economic achievements. But this time, though, that warning there perhaps talking about the headwinds that China faces both geopolitically as well as economically, right? Because you have the November elections, a very tight race there that could potentially decide whether it will flip the switch from risk on to risk off in China. And of course, those economic woes that has been going on for a few months now, with PMI contracting for 5 straight months, consumer confidence in August at its lowest since November 2022. And also we had the home sales data that just came out in September showing that it's down 38%, worse than the decline that we saw the previous month, that is 27% in August.
Yeah, and we've had that very firm language around the property sector in particular, and that real push now to try and find a floor and to stop the decline. But Beijing, for instance, is one of those moving through with some sort of home buying or that easing of restrictions.
Yeah, so Beijing is now following the footsteps of the other Tier 1 cities like Shanghai, Shenzhen and Guangzhou, and it is allowing non-residents to buy homes in the core residential districts of Beijing if they pay social insurance or income tax for 3 years. That's down from the previous 5-year requirement. They're also lowering the down payment ratios for first and second home purchases to 15% and 20% respectively. And as you said, this comes after that Thursday Politburo meeting where the government pledged to put a floor to stop the decline in this property sector after, as I said, we saw that deep decline in September, despite all of those measures that have been rolled out so far. So suddenly we're seeing that optimism filtering through to the real estate developers stock. It's up 15% yesterday, but some analysts, though, saying that buyers could still stay on the sidelines, although we could see a slight pickup in buying activity in October, but more still needs to be done, just given the deep slump that we have seen so far.
Right, that was Min Min there, our China correspondent, Min Min Lo. And we're going to have more on China, these home buying, easing of measures here, what we heard from President Xi coming up in the next hour, because we get analysis on China's domestic, its foreign policy priorities as well. As the PRC marks 75 years, we'll be joined by East China Normal University's Josef, Gregory, Mahoney. That's coming up. We'll have more ahead. This is Bloomberg. Well, this is sort of one of the big debates that we're having this morning, because we've got this story out on the Bloomberg terminal. It's doing very well. It's talking about how the US is sort of not really taking China's equity rally in its stride. And this chart here kind of puts it in perspective for us, because whilst we've seen that huge run up in the CSI 300 into the Golden Week break, following, of course, all of these stimulus measures, the S&P 500 is barely budged. Yeah. And so there's that question as whether the moves in China, whether they're really reverberating on Wall Street at all, even though if you were to take a look at ETF inflows, actually have seen big funds flowing into the likes of the Kraneshares ETF, for instance. We can speak with them in about 10 minutes from now. But that is really one of the big question marks. Is it having those second order effects? Mark Cranfield, for instance, is saying
it does. But some say, maybe the U.S. are, they're just too focused or even obsessed about the Fed and how the labor market's going to do. Morgan Stanley's chief U.S. equity strategist, Michael Wilson, did say that, right? They asked that question to him about, does this China stimulus mean anything to him? He goes, is it going to change the trajectory of growth in the U.S. in a big way? The answer is no. He says, we're more focused when it comes to the labor market in the U.S. Here's more from Michael Wilson.
Good news is good news until it's not, because then the Fed has to raise rates too much. That was the story before. Now it's bad news is good until it's too bad. So, look, I think there's three parts to what happened in the last 2 weeks. Okay, first of all, the Fed gave us 50. I think everybody was kind of expecting 25 right up until the last minute. And so it was still an upside surprise. Now, we had written about this. We thought 50 going into the meeting, if they could convey that it was not being done for growth concern reasons, would be a positive. So we got that, checked the box. And I don't think that was a shocker, but it was a positive event. And then we got the China stimulus. But that came in two pieces. Don't forget, right? It came with a monetary stimulus initially. And I would say most people, including us, were like, well, that's interesting, but that's not going to do much. We need fiscal stimulus. They're in deflation, right? We're not going to get any action in the real economy. So then, of course, the policymakers came in because they listened. And they said, okay, we'll do some fiscal too. And then we got this massive move. So we've had a 20% plus move in 3 days, which I would say very few people captured. All right. The other thing you have to think about, why is it up so much today? Well, Japan sold off sharply over the weekend. So I think, China has been a source of funds for the Japan trade, for the India trade, all the other EM countries that have done well. Okay, and now you may see some reversion back, but that feels pretty overcooked to me at this moment. What we care about in the U.S. is the following. Is this going to change the trajectory of growth in the U.S. in a meaningful way? And the answer really is no. It can maybe get some excitement in things like materials, some of the industrial stocks who have direct leverage to perhaps a China stimulus of some kind. But beyond that, I think we need to see the labor market get better in the U.S., and we need to see the policy changes from the Fed have an impact on consumers.
Let's talk more about the labor market, because clearly a lot of investors are hinging on Friday's report. How much could that move the needle? And if you have a significant miss to the downside, what would that mean for equities? I mean,
for us, the labor market's everything now. And by the way, it's everything for the Fed.
Yeah.
So, this is the $64 trillion question. Did the Fed cut 50 because they are actually worried about the labor trends, which I think they should be paying attention to that? Or are they doing it because, look, inflation's come down and they're too tight to begin with, and so that they're able to, is the Fed cutting it because they can or because they need to? So the labor market will tell us the answer to that. And, we've been pretty straightforward about this. If the unemployment rate goes up again, I think that's a clear negative. If the unemployment rate can come down and jobs data is okay without any major revisions, that would be a positive.
That was Morgan Stanley's chief U.S. equity strategist, Mike Wilson, speaking with our colleague Sonali Barsik there. And I think something else that really puts it into perspective for us around how much do we care around the U.S. versus the Chinese stock market performance, and what kind of impact would China have on Wall Street? Maybe take a look at this chart as well, because it just shows the sheer outperformance of U.S. equities over Chinese ones following the days of the pandemic here. I mean, you're looking at very sizable gains for the S&P 500. The CSI 300 is still down following, what's that there, end of 2020.
Yeah, so that gap is still quite wide, as you say. So maybe there is still more room to narrow, as most of the people that we've talked about this week have said, right? Maybe at least 10% upside from here. We'll have more coming up. You're watching The China Show. This is Bloomberg.
Over the weekend, we continue to see the State Council meeting that is suggesting we are going to fasten the policy implementation. So that's why we are seeing more investors are looking forward for more policies, more discussions to come after the National Day holidays.
The scale of the rally that we've seen has already exceeded what we've seen back in, say, the time of April this year. Okay, so there's certain signs of exuberance there. Okay, if that does come through, then obviously there will be more legs to go, because the valuation is still very, very cheap in China.
There were some of our guests talking about the equity rally in China and whether it can continue once markets reopen. Of course, we've just gone into the Golden Week holiday period. Markets are shut now for a period. But let's just take stock of that huge rally that we've seen here, because the CSI 300 is now into a bull market territory. We have just seen such a coordinated amount of policy measures being announced, targeting lots of different areas of the market: equities, property, consumption. all of it's coming together to try and lift that growth outlook. That question of whether we see that rally extending once we come back from the Golden Week holiday, for me, not only depends maybe on what we get in terms of course, consumption trends over these next few days, early indicators of that, any sort of tone that's struck by policymakers again, but also that question of what we start to hear from investors and how they're thinking about this. And I think BlackRock, for instance, turning overweight on Chinese stocks just overnight is another voice that adds to that rally.
I mean, that 8% pop on the CSI 300 was pretty eye-popping yesterday alone, right? On the last day before that Golden Week, I think Hao Hong was saying it was one of the best days that he's had since covering Chinese markets for the past 30 years or so. So it has been epic. And you take a look at how these inflows into these ETFs have been in the last 2 weeks or so. These are the ones of the Kraneshares. KWeb, I mean, we're talking about 30% gains there, 500 million or more of inflows in just the last week alone. It's been a stunning turnaround. Let's bring in Xiaolin Chen, head of international at Kraneshares. She's been watching all of this. How has the past week been for you, Xiaolin?
It's a huge relief, Yvonne. The Chinese policymaker has been doing easing policy since Q1 2023. Finally, they have been very certain with their directions and processes and consistencies. And all these announcements you have seen in the market, I think a lot of people has given analysis to, is really helping on the demand side, if not providing immediate disposable income for Chinese households. That's a huge relief for the market. That long-awaited catalyst has started to materialize. Like you rightly point, so our ETF clearly experienced the most inflow for a long period of time. We literally, once everything settles, it will be close to 2 billion.
Yeah, and actually we've just got a chart up now taking a look at those inflows, and the Kraneshares one is the lines or the bars that you're seeing there in red, so very, very significant. What about the amount of stimulus that we've seen? Did that sort of, I mean, you're saying relief here, so did it exceed your expectations? Are you saying that this is sort of more than or a whatever it takes moment?
This actually beat our expectation from all fronts. If you remember ECB delivering the easing policy, Mario Draghi says they will do whatever it takes to get the economy back on track. And some saying they do not fight with the Fed. China delivered 2x in 1. They focus on, obviously, providing liquidity to market, also the new monetary tool of 500 billion. And the government publicly said, if this is not enough, we're ready for the second round. If needed, the third round will be ready. I think the tone of delivering the policy is completely different. That market never seen before. This is really markets getting the relief of liquidity, helping on the consumer front. Also, the tone from the top down to say, almost like we will do whatever it takes to get China's economy back on track.
Okay, there are voices like yours, Xiaolin, that are very upbeat. There are some that are saying, look, this is very just sentiment driven right now. The euphoria that we're seeing is just a matter of maybe were expectations just too low, or really is what we've heard so far transformative enough to really shift the fundamentals of this economy? I think that's still up in the air, that question, right, Xiaolin?
Absolutely, Yvonne. Broadly speaking, mutual funds still about 300, 400 basis points underweight China. So it's going to be a tough time for mutual funds to print their annual quarter statements this quarter. And hedge funds at historical low levels, 7% allocations to China. If you remember, even before, after the pandemic reopening happened, hedge funds was at 13% allocated to China. So you can see the differences of allocations to China. Broadly speaking, this is still a huge underowned, undervalued asset class, no doubt about that. 10 days ago, Yvonne, I was at a meeting at Edinburgh. My topic was like talking about China, but this underowned, undervalued, unloved, unpopular asset class of China. 10 days later, things changed. People felt like, oh, this happened overnight. But you cover the market enough. It's 7 quarters in a row that Chinese policymaker has been doing easing accommodative policy. And you're absolutely right. This is policy-driven rally for the time being. So you see broad beta. Soon, the second stage will emerge, which is differentiating which sector will lead. In our opinion, the policy focus very much on consumer power. Okay, they provide immediate disposable income to household. This will differentiate consumer stock will continue to lead. And the next stage is stocks differentiation analysts or investors will start to differentiate which stocks give me the most upside, the most promising future revenue with very favorable valuation that still believe is a consumer stocks. So you will soon start to see the stage 2 start to emerge. With the liquidity provided to the corporates, clearly this will allow them to continue to expand the business they have been long hold with the cheap cost, and also allowing them new tools to refinancing, remortgaging, re-lending with their stocks. Liquidity is not an issue in China anymore. All you need to do is focus on growing your revenue, for your corporates. A lot of Chinese corporates has been waiting for internationalized second, expanding their lines to different tiers across China. I think this is also a relief for corporates to know, you know what, we got to focus on the fundamental, which they have been over the last 2 or 3 years. This market has been discounting their effort, discounting the results for a long period of time, focusing on macro and policy. Now macro and policy being very clear, positive.
It's interesting about that question mark around, you're saying liquidity isn't a problem anymore, but credit demand has been weak for so long in China from corporates and from households. I mean, the money's been there, but just people haven't wanted to borrow it. So do you think that enough confidence has really been restored here? I mean, we're talking about a couple of weeks, really, of this sort of level of optimism. A couple of weeks before that, people were talking about this being the garbage time of China's economy.
Exactly how I experienced it 10 days ago at the event now. Literally, if you use, for instance, the mortgage policy announced by Pan from the governor of PBOC, he literally said this interest rate cut will touch 50 million people, 50 million households in China. Interest rates alone will go about 150 billion every year, year over year. So that's immediate cut with mortgage. 5 trillion mortgage package can come forward and remortgage to a lower rate. That's another immediate available of disposable income. Your mortgage is going to go down today. Your mortgage payment, monthly payment. That's one. Providing liquidity make you feel like you have more income or you have more disposable income. That's one. Second, you absolutely hit correctly, is the job has to be picked up. Okay, people have better income, better job to allow them to pay better. They would feel more confident to spend. Spending is everything they focus on this round of policy. Once you have the liquidity, corporate feel the support is coming down from top down to bottom. They will start to expand. They'll start to hiring more jobs, getting more, employee market to start to work. Don't forget, Chinese government has a target to provide nearly 20 million new jobs this year. So I think if they deliver that with this policy, was really partially, indirectly helping the job market. Have better job, have better income, the sentiment will feel good. And then, of course, people will not spend overnight with their disposable income. But remember, their income was up from 20 trillion to 147, so that's amazingly up of the trend. So I say liquidity is not an issue, means that Chinese household has the liquidity, has the savings. Like you rightly said, it's really what will make them to encourage them to say, this policy will create jobs. People have immediate income. They will feel good. And then, you know what? Next thing they will look is where I can trade myself. One, also, most important, private corporate will start to expand and build the business out, start to create more jobs for the market.
There's also liquidity support for the stock market from Beijing as well. I mean, it seems like what we're hearing in these swap facilities is that the PBOC is almost sponsoring some sort of state support, which it used to be an open question whether the national team was there or not. That seems to dispel those questions now, Xiaolin. But we're talking about a 500 billion yuan swap facility, 300 billion yuan relending facility. Are those numbers good enough for you? I mean, that's usually, I think, average how much we see in terms of stock turnover on a day. So how much impact could that have?
Great question, Yvonne. Is 500 billion enough? I don't know. Maybe it's not, based on just the number. But it's whatever the Governor Pan, Gongsheng, he was saying literally at PBOC. He said, I told Mr. Wu, I watched the conference repeatedly. He said, I told Mr. Wu, who's the chairman of CSRC, if 500 billion is not enough, we're ready for the second round. If needed be, we are ready for third round. Yvonne, surely the tone and the determination from the policymakers to say, we do whatever it takes for the market to re-inject or rebuild up their confidence into this market. We're ready, we're here. The 300 billion, he said the same thing. If you watch the conference, he said, if 300 billion, do it well, use it well, we're ready for the second round. If needed be I told Mr. Wu we're ready for the third round. It's surely those dialogue, and you see the dynamic between all the senior officials from China at the conference that's showing that we are ready to really help this market. I think, at the end of the day, Yvonne, the number is less important or relevant for this context. It's really their direction they are taking. It's like, do not fight with the Fed, and this is the moment for PBOC.
Xiaolin Chen there, head of international at Kraneshares, and that stock stabilization fund, a very big focus, although mainland markets are shut right now for the Golden Week holiday. And this is a period where we're expecting nearly 2 billion domestic trips in China. That vacation period, of course, beginning today. And if we do get that near 2 billion trips, we're up nearly 19% on the year, or from the same period, rather, in the pre-pandemic 2019. Our Chief North Asia correspondent, Stephen Engel, is looking at these new stimulus measures, whether they're going to give that retail sector a much-needed shot in the arm.
Now that China's delivered bags of pro-growth goodies for its struggling economy, the question now is, will reluctant consumers take the stimulus bait and shop, or continue to lie flat and hold back over this week-long National Day holiday?
If you look at the holiday data, right, so consumption data, high-frequency data, they are okay in the past holidays, particularly in terms of the number of people traveling. But if you like the consumption, so per traveler consumption data is not very strong, right? So people still travel, but they spend less.
No doubt a stimulus-juiced stock market, lowered borrowing costs, relaxed home buying rules, and rare cash handouts to some and subsidies for jobless new graduates do help. But do they adequately address demand shortfalls and longer-term structural issues?
It's not enough to change the whole economic dynamic yet. Domestic demand or anything stimulating the consumption side remains absent.
Simply put,
the Chinese consumer is becoming much more value conscious.
And that's being felt across the economy, including in the hospitality sector. Global resort chain Club Med, owned by China's Fosun Group, says it needs to find new experiences to attract price-sensitive guests.
If we're talking about doubling the price but deliver the same service as before in the peak seasons, people don't buy in. They want a price value on that. Yeah. So simply raise the price doesn't work anymore. So we need to think about a new product.
Like bringing the Alps indoors to a massive facility tied to a Club Med an hour outside of China's financial capital.
Never did I ever expect to ski in Shanghai.
Opened less than a year ago, it's one of the largest indoor ski and boarding slopes in an otherwise flat coastal eastern China.
Following the Beijing Winter Olympics, winter sports are increasingly popular. This is a 91,000 square meter facility, and as you can see, there's no shortage of customers, even though the price tag is not cheap. You have the Club Med next door, so one night room in the hotel plus 1 day skiing is about $360 US. Not cheap, but it does offer year-round outdoor leisure sports, well, actually indoor.
The growing trend is to prioritize spending on activities.
That's true.
Yes, buying stuff and clothing is more expensive.
Some experience-related consumptions, partially also related to travel, so like outdoor spending, outdoor apparel, even it's super expensive, but selected brands are still doing really well.
Like the newbies on the bunny slopes, consumer caution is perhaps warranted when the economy is, well, going downhill. We'll see if an avalanche of stimulus and nerve get the mojo flowing again.
It's all about confidence. It's all about confidence.
Stephen Engel, Bloomberg News, Jiangsu Province, China.
Yes, Stephen Engel is best on the slopes and on assignment. If you're a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function, TV Go. You can also join the conversation. Send instant messages to our team and our guests during our live shows. Check it out at TV Go. We got plenty more ahead. This is Bloomberg. Welcome back to the China Show. New York's governor says she fully expects a strike by dock workers to go ahead on Tuesday and halting operations at East and Gulf Coast trade gateways. Port employers say they have raised their wage offer, and the Biden administration says the best outcome would be a deal. before midnight. Let's bring in our U.S. economy editor, Laura Curtis. I know she's staying up until midnight, waiting for these results. Laura, just tell us what's at stake here.
Well, if no deal is reached either on a new 6-year contract or just an agreement to extend, working through the tough part of the negotiations coming up, we're going to see all of the major ports from Houston to Miami to New York to Boston shut down. Basically anything that comes into or out or leaves the country in a container will be impacted. So it's quite a broad potential swipe at the economy.
You just said before there in the ad break that it might not even go ahead, but is there any sort of chance here that we are going to see sort of a last-minute resolution to this, or what are the odds here that we actually do proceed with that demonstration?
Oh, Annabelle, there is always a chance. We're not sure. It's sort of the type of thing that you don't know until you know. And even this afternoon, we had no idea that there were negotiations continuing until we got word from the employers that they'd extended a new offer with higher wages. Nothing back from the union yet, so I don't think that's too not a great sign. But we still have 5 hours left, so it's possible.
What are the sort of economic impacts that we're looking at here? I know JP Morgan has been doing some of the costings on this, and are there any types of or categories of products that are going to be most impacted as well?
Yeah, so there are a few things that we're keeping an eye on. One of them is autos and auto parts. A huge portion of those commodities come in through the East and Gulf Coast ports. They would also be very hard to reroute because they're large, bulky, and because the ports that we have over on the West Coast where I am are running near capacity. So factories in some swing states like Michigan, for example, may see that kind of affect their operations sooner than other industries like sort of retailers who've been stockpiling goods for a long time in anticipation of this. The other category of goods we could see that consumers would notice relatively quickly is things like fresh fruit imports and then exports too. Farmers who grow cattle for export. That's an extremely profitable commodity for them, and it's also very sensitive. We know that there's only so much cold storage available at these facilities. It's going to fill up very soon, and then everything has to be sold on the domestic market, which would be quite a hit for them.
Yeah, and Laura, to your point there, we've actually just had some commentary from the Fed Reserve Bank of Chicago President Austin Goolsbee saying that he would be concerned if that dock workers strike does drag on, given the possible impact to supply chains as well. So certainly seem to be tracking very closely. We know you're watching it very closely as well, that US port strike risk over the next few hours. But that was our US economy editor, Laura Curtis, there in Los Angeles. We'll have more ahead. This is the China show. Chinese markets, of course, shut, but we are watching and waiting for any sort of cues around consumption over the Golden Week break as well. More ahead. This is Bloomberg. Welcome back to the China Show. Here are some of the big corporate stories that we're tracking this morning. In tech-focused publication, The Information is reporting that SoftBank's Vision Fund is planning to invest $500 million into OpenAI. This is part of a larger funding round that would cement OpenAI's place as one of the world's most valuable startups. Bloomberg previously reported that OpenAI is in talks to raise $6.5 billion from investors at a valuation of $150 billion. Satellite providers DirecTV and Dish have agreed to merge in a deal that will create the biggest pay TV provider in the US. DirecTV will acquire Dish TV and Sling TV from EchoStar for just $1, but will also take on nearly $10 billion of debt. In connection with the deal, TPG will acquire the 70% stake in DirecTV that it doesn't already hold from AT&T for nearly $8 billion in cash. Qatar Airways plans to take a 25% stake in Australia's Virgin Airlines. The Gulf carrier plans to acquire the minority stake from Virgin Australia owner Bain Capital once regulators give approval. Australia's government last year denied Qatar's bid for more flights into Sydney. Virgin's trying to challenge Australia's dominant market player, Qantas. The Wall Street Journal is reporting that PepsiCo is in advanced talks to buy tortilla chip maker Siete Foods for over $1 billion. The report says a deal could be announced soon. Siete, which is privately held, is known for its Mexican-inspired products, including tortilla chips. It's said to be drawing takeover interest from PE firms as well.
All right, another check of the markets here. We're watching very closely when it comes to movers in Japan, given that things are looking a little bit better than yesterday, given the volatility we saw post-LDP vote. And you are seeing, when it comes to these trading houses in Japan, are doing very well here today. There is a story that Berkshire is playing that yen offering, so certainly some of these trading houses are gaining. The likes of Itochu is up some 3%. Same goes to Sumitomo here this morning. So a lot of implications that maybe this yen bond sale gives Buffett some more cash to buy stocks. That's why you're seeing them doing very well here today. And Japan, yes, as we talked about, after what was a pretty big, I guess, ouchie when it comes to, what happened with risk here after Ishiba was chosen by the LDP to be the next prime minister. Things are looking much better. Dollar yen back to weaker levels today. This is Bloomberg. Welcome back to the China Show. Here's a look, of course, of how Asia is doing. Keep in mind, it's Hong Kong, it's China, it's South Korea are all closed here this morning. And really, Hong Kong and China really embarking on this Golden Week holiday. So Hong Kong will be shut for one day, China shut for the next 5. But we are continuing on, at least with this risk rally here today. And that really is despite some of these hawkish comments we got from Powell. The market, we saw a little bit of movement in the bond market, but yeah, stocks really kind of shrugged it all off.
Yeah, so what Powell was saying essentially is that sort of this thinking around easing being a certainty probably shouldn't be thinking that just yet, and they are going to be staying data dependent. It doesn't really rock the boat from what we've already heard from Powell to date, but certainly that jobs figure on Friday is going to be very closely tracked in light of that. Today, what's really driving that optimism we're seeing for Asian equities is the moves in Japan, because you've seen the Nikkei yesterday, 225, down nearly 5%. Today, you've recovered somewhat to the tune of around 1.5%, but investors, again, they're just not only pricing out Takaichi, who had been sort of seen as someone who was going to be a bit more thinking around the BOJ, that wouldn't be pushing for any sort of hikes. Now you've got Ishiba, of course, that victory, and traders, again, once thinking around this, where do we see this lead up to the election going? That vote has been set for the end of October, and we don't really have too much policy clarity from Ishiba yet either, so something that could perhaps inject volatility in the nearer term. What else we're tracking is, of course, it's a milestone of sorts, Yvonne, because we're heading into the fourth quarter of trading. And if you were to take a look at the seasonality function, which we will do later this hour, but it tells you a very interesting story. In the third quarter, we actually saw Asian equities posting gains. If you look on a 10-year basis, they don't typically. You combine what we've got around this cutting expectations across a raft of central banks, you can add that to the China stimulus, perhaps we're setting up for a pretty robust fourth quarter as well. This here, though, takes a look at some of the China proxies, and that's going to be something to track over this Golden Week holiday break. Do we see all that euphoria really lasting? Today, you've got some of those just giving up some of those real robust gains. Iron ore, for instance, you're just slightly under pressure, still around $110 a barrel, or rather a ton mark, though. Aussie dollar as well, another proxy we watch quite closely.
Yeah, so they're slowing down, but not really seeing huge declines. Rio Tinto, though, you are seeing some of these iron ore miners and the like are one of the biggest laggards on the Asia-Pacific index here today. For more, let's bring in Mark Cranfield, our MLI strategist. It's a quiet day, Mark. What do you focus on the most, your team, today?
Well, it's the kind of day when the guys in the second row tend to get their chance. So apart from Jerome Powell sounding a little bit hawkish today, we just had some movement in the Kiwi dollar. You were probably watching that earlier. The Kiwi is underperforming the other major currencies today, and that's because we've got a New Zealand Central Bank meeting next week, and there are now expectations in the market that the New Zealand may lower by 50 basis points like the Fed did. So that's obviously putting some pressure on the New Zealand dollar. And on a day when a lot of markets are closed, as you've been talking about, liquidity is going to be less than usual. People are looking for something to do, and they'll be looking for some of the low-hanging fruit. And on a day like this, in the foreign exchange market, the New Zealand dollar may get a lot more attention than it normally would, just because now people are expecting maybe a bigger rate cut. On the flip side, you've got the Federal Reserve, who are trying to get themselves out of a position where they're forced into back-to-back rate cuts of 50 basis points. That's really the context of what Jerome Powell is doing here. He's trying to persuade traders, look, just because you got a big rate cut the last time, don't think that it's guaranteed you're going to get another one in November. I'm sure the last thing that the Fed chairman wants to do is to get set on a path where it's 50, 50, 50 all the way into next year. He certainly isn't looking for that, particularly when he knows that inflation is coming down towards his target, but it's not racing down. It seems to be stabilizing. And also you've got the job situation where, yes, the jobs rate is a bit higher, but it's still a pretty robust situation. Plus you've got the stock market doing extremely well in America. It doesn't need another rate cut purely on that basis. So he's trying to moderate expectations and let the data help to decide where the Fed goes. Of course, if you get a really weak jobs report this week, then it's going to be very difficult for him to avoid people thinking that a big cut is coming. But anyway, he's going to try and temper expectations as much as he can. In the meantime, a few other markets in the second row get a chance to have a look, and one of them is New Zealand. And one of my colleagues is writing about Philippines today, which is another market we don't look at very often on MLive.
Mark, to your point, if we've got the US sort of cruising into a softer landing, you're saying the stage isn't really being set for any sort of 50 basis point cuts moving forward. What is the big driver then for equities in the fourth quarter? Is it still the story around China's stimulus then, perhaps?
That's becoming a global story. So you already had significant help from Europe and the United States. The central banks there already into their rate easing path at a time, particularly in America, when you might think the economy, the GDP numbers actually been pretty good from the United States. They don't, on the surface, seem to warrant a lot of easing, but anyway, it started. So obviously it's adding fuel to the fire. Now you throw in big stimulus from China as well. So it's really becoming a global story. You've got all corners of the world now helping to ease monetary policy, plus China is doing quite a lot on the fiscal side as well. So as you were saying earlier, the chances are the fourth quarter is going to look pretty good for risk assets. And at the top of the food chain in risk assets is equity markets. So it'd be pretty hard to bet against a decent run into the year end for equities. On top of that, you've got Saudi Arabia looking to increase market share in the oil space. Now, that only means one thing. That means they're willing to accept lower prices in crude oil. Now, that's, again, generally good for markets. It's good for getting inflation down as well. So all the factors are coming into place that makes it look as though the fourth quarter has been pretty decent for risk assets.
That was Bloomberg's MLive strategist Mark Cranfield there, as of course we kick off the first day of the fourth quarter for trading. But Mark mentioned there the Middle East as well, and let's stay there because Israel says it's begun targeted ground raids in Lebanon, escalating a campaign to root out Hezbollah despite international calls for restraint. For more, let's bring in Bloomberg senior editor Bill Ferries. And Bill, it seems like the war against Hamas in the Gaza Strip is at a standstill, so the attention is now on Lebanon. How large is this focus likely to be? Are we set to see any sort of widening beyond sort of these targeted raids?
Well, that's the big question. Israel says, as you mentioned, these are targeted raids, limited numbers of troops, of forces, trying to push back on Hezbollah positions really within about 10 kilometers, 6 miles of the border region. It remains to be seen whether that's where they stop. But the reality is we've probably entered a new phase of this conflict now that you have Israeli troops moving around on Lebanese territory. Israel has said it wants to push back because it needs 60 to 70,000 Israelis who have had to flee their homes in northern Israel. It wants them to be able to return. But Hezbollah has vowed to continue launching its attacks on Israel until there is some kind of a peace deal or a ceasefire, really, in Gaza. There's no sign, as you mentioned, of that agreement, that ceasefire happening. So now Israel is really pushing out on two fronts. Everyone's watching to see to what degree Hezbollah is capable of pushing back and whether Iran decides to more actively engage in this fight.
And what does it tell us? I mean, obviously, we don't know what Hezbollah's capabilities are. I mean, we talked about their leader being killed. They've been paralyzed. Do you think that they have the capabilities to respond in some way, or are they just saving resources for, a potential bigger attack?
I mean, when you look at what's happened to them over the last 2 or 3 weeks, going back to those, the pagers and walkie-talkies, which targeted not only leaders but many of the more, rank and file and some of the mid-level commanders, that alone would have put most organizations into a lot of disarray. Now it's not just their leader that they've lost. They've lost almost a huge swath of their entire leadership. If you look at, the top 10 commanders in Hezbollah, many of them have already been taken off the battlefield. So you would think that organization would be really struggling to mount a coordinated response to Israel. That said, I think there are fears that the longer Israeli troops remain on Lebanese territory, that gives Hezbollah more time to try to regroup, to try to figure out what weapon supplies it still has, how it can fight back, and whether Iran engages. So I think there will be a lot of concern in Washington and among Israel's allies about how long those limited groups or limited number of troops are actually in Lebanese territory and how quickly they pull back, or whether this is the start of a much bigger invasion of ground forces into southern Lebanon.
And Bill, on that point, I mean, since October 7 of last year, when we had the initial attack by Hamas on Israel, we've questioned whether this could become a broader regional or even global conflict. Do we see an increased likelihood at this point? I mean, we know that the US, for instance, is deploying even more troops to this region.
Yeah, the U.S. has said it's going to deploy a few thousand more forces, including fighter jet squadrons, to the region. It's going to ask some forces that were due to rotate out to stay in. I think the big question here is Iran. It has looked so far like Iran is trying to limit its engagement, limit its escalation in this conflict. It has not really stepped up significantly to help its allies in either Hezbollah or Hamas. I think that would be the trigger for really calling this a much broader conflict, as if Iran more directly engages. So far, we haven't seen that. But there are certainly concerns about whether Israel's military will end up being overstretched by this, continuing their operations in Gaza against Hamas, and now putting a more aggressive foot forward against Hezbollah with its troops actually on Lebanese territory.
Bill Ferries, thank you. Our senior editor joining us out of Singapore with the latest on what's happening in the Middle East. Of course, you can turn to your Bloomberg for more on the tensions in the region there as well. T-Live Go to get plenty of commentary analysis from our expert editors this morning.
Yeah, and coming up, we're going to be shifting our attention back to this region as well, because in his first speech after Beijing's stimulus barrage, President Xi Jinping has urged caution over what he says could be a rough patch ahead for China. We'll have that analysis next. This is Bloomberg.
October 1st, with the election weeks away, the VP candidates are set to face off. When we fight,
you guys are going to get me all fired up again.
Trust Bloomberg for news and analysis.
So is it style or substance, or maybe both? We'll be hearing from Tim Walz and J.D. Vance in prime time.
Yeah, and the question is whether the vice presidential nominees are actually able to move the needle.
Tune in for the CBS News Vice Presidential Debate simulcast with special coverage starting at 8 p.m. Eastern. Context changes everything.
经过75年的艰苦奋斗
After 75 years of hard work, China's modernization has unfolded a magnificent picture and presented an extremely bright and brilliant prospect. At the same time, the road ahead will not be smooth. There will definitely be difficulties and obstacles, and we may encounter major tests such as high winds, rough seas, or even stormy waves.
我们要居安思危
We must be vigilant in times of peace, plan ahead, and rely closely on the entire party, the entire army, and the people of all ethnic groups across the country to resolutely overcome all the uncertain and unpredictable risks and challenges. No difficulties can stop the Chinese people from moving forward.
Pretty somber tone there from the Chinese president himself, Xi Jinping, in his first public comments since Beijing launched its unprecedented stimulus package. For more, let's bring in Josef Gregory Mahoney, professor of politics and international relations. He joins us from the East China Normal University. Professor, it's great to have you here on the program and on a holiday at that. I want to get your take on what we heard from the president just now, talking about choppy roads ahead. It's rare to hear him be a little bit that somber in some ways in terms of the tone, but maybe it confirms why we saw such a massive stimulus blitz in the last week and a half or so. What are the politics behind this stimulus package? Are the technocrats finally reemerging? And what prompted this shift, do you think?
Well, firstly, good morning from Shanghai, and happy National Day to your Chinese viewers. I think this is something that a lot of Western media has picked up on. They've sort of emphasized the dark or somber message in that speech, and asked, why, despite this tremendous economic stimulus that we've seen over the past week, why is he reminding people of the challenges? And I think the key point here is that this has been part of his narrative since he came to office. He's always said that we're in a new era, that we face challenges unseen in a century. And so this is not necessarily new messaging. But I think there's also, this desire to kind of bookend the stimulus in a sense that we have seen a remarkable turnaround of optimism in the country in just the past week. And I think he wants to, appropriately temper expectations and remind people that there are still challenges ahead, and not to get ahead of that. And I think this is just smart politics on his part.
You mentioned specifically that it was sort of international Western media that picked up on this so-called somber tone, but does that match how you interpreted what he said, and also the feeling on the ground in mainland China?
Well, I think one of the things, it's sort of interesting because when these stimulus policies came out, this was in the lead up to the holiday that we're now encountering. And for those who are not familiar with living in China, as we approach one of these golden weeks, so-called golden weeks, we're all working overtime. We have to earn the holiday for the most part before we take it. So for the past 7 or 8 days, people have been going to school, Saturday, Sunday, going to work, so forth and so on. I was teaching class late last night on Monday. All of this is so that we can afford this time off. And so people tend to be really focused and on taking care of their obligations, and at the same time preparing for travel and preparing gifts and meeting friends and family. So there's a lot of distractions that are taking people's attention. At the same time, certainly that political stimulus did catch a lot of people. Not necessarily by surprise. I think a lot of people anticipated that something was coming, but it certainly was, I think, bolder than some people expected. And certainly there was a lot of delight that it had arrived. But at the same time, and I think we saw a lot of money moving as a result, increased optimism. Now, whether or not this translates into increased consumer confidence remains to be seen. But at the same time, I hear a lot of my colleagues, but also other people in the business sector saying, this isn't enough. This is just the first hit, and that we will need to see more, particularly to encourage increased consumer spending. So I think that he wants to sort of temper expectations because I think he wants the market to work.
And there are questions of whether this old development model is still working when you talk about this economy that's still in deflation, youth employment is now at a record, and the private sector is still reeling from these crackdowns. Joseph, I have to wonder though, as we mark the 75th anniversary of the PRC, what has been achieved, and the so-called social contract where you stay out of politics, you don't enjoy, you have limited freedoms, I should say, but then again, we promised you better prosperity and a better life. Do you think that's been undermined given the macro backdrop now?
Well, I wouldn't characterize it quite the way you have. If we do want to use the term social contract, I think there has always been an understanding that there are trade-offs, that this type of political system is able to deliver certain results, and at a certain point in time that was existentially necessary to deliver those results. And there's still a sense that there's a lot to do, and certainly pressures and threats from overseas. But at the same time, I think it's also fair to say, and this is certainly something the political system reiterates, is that it does, in fact, reflect deeper traditions and values. It's not simply a trade-off, but sort of consistent with some aspects of the political systems that preceded it. Now, I think one of the key points here is that when we think about political legitimacy, the fundamental point that a lot of people come to is whether or not it's being a responsible steward of the national interest and well-being. And this isn't simply tied to a specific economic indicator, a specific growth rate, or even something like youth unemployment, although certainly these are important issues. I think more fundamentally, it's whether there's generally been good or as good as possible economic management, public health management, ecological management, public security and national security, all of these things, which I think, a lot of Chinese, they are constantly balancing these issues and realizing that there are trade-offs that have to be made. Certainly as China tries to, sustain economic growth in the coastal regions, but stimulate economic growth in the interior, so forth and so on.
Reshaping the Chinese economy, though, has come at a cost. And we have seen a level of rising discontentment against President Xi, and there has been rising social instability that even, for instance, Morgan Stanley was saying was approaching the level of what we saw back in 2022 ahead of the great reopening. Do you think that the policy announcements over the past couple of weeks are enough to appease people?
Well, again, I think we have to put things in perspective. I haven't seen any clear numbers or indicators to show that, that we have significant social or political unrest or political dissatisfaction in China. The latest figures we have are that still somewhere around 85% of the Chinese people trust their government to make good decisions. Now, whether or not they're always happy with those decisions or happy with the results, that's another matter. But I think there's a considerable amount of faith that the political system is trying to act in the best interest of the country and the people, and has not, separated itself as a political class that is benefiting at the people's expense. That said, I'd also think that although President Xi is certainly the face of the party and the government, and certainly we pay a lot of respect, I think there's also a clear understanding among the Chinese people that the Chinese political system is bigger than one man. And that as a result, it's not simply one person calling the shots or one person that you need to be happy with or upset with.
There seems to be a focus now, national security, when it comes to this social contract now, Professor. And it seems to be there's what policymakers have is maybe a love-hate relationship when it comes to the private sector. How do you think the president really feels about private enterprises now? Do you think that, the central government is ready to put support into the private sector more?
Well, I do think that there have been a number of reasons why the government has been concerned about the tech sector, fintech developments, for example, that would have compromised perhaps some capacities to maintain control over the financial system. But at the same time, I think this was definitively answered by the third plenum, that China would continue to support and encourage the state-owned enterprises, but seek a better cooperative relationship between the SOEs and the private sector And the way I interpret it is that the system understands that the private sector is perhaps better at innovating new tech, and that this new tech can be used by the state sector for upgrading. And so what we'll continue to see is efforts to create not only more cooperation between these two sectors, and certainly to make sure that there's not a privileging of the state sector in a way that harms the private sector. Yeah.
Joseph, thanks very much for your insights there. That was Joseph Gregory Mahoney, Professor of Politics and International Relations at East China Normal University. We'll have more ahead. This is Bloomberg.
All right, we're taking a look at when it comes to some of the dollar moves that we've seen for the past week or so. Not really telling us a huge story, but again, you're still seeing some of these EM Asia FX that's outperforming here today. And really, we're tracking the Kiwi dollar in particular as well, with one local bank calling for a 50 basis point cut next week from the RBNZ. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break. And yes, things are looking much better than yesterday. We're seeing gains about 1% for the Nikkei 225 and topics here. Dollar yen, I mean, the weakness that we saw in the yen is sustaining here for today, here after what we heard from Jay Powell in that speech, talking a little bit more about there's no preset path to how rates are going to go. And that certainly sent the dollar a little bit stronger here. So 144 levels we're approaching when it comes to dollar yen. That's taking a bit of pressure off equities here in Tokyo. But certainly there's a lot to take in, right? When we talk about this set to be Prime Minister Ishiba talking about this early general election in October, most are saying, look, expect more volatility still this month as we start a new quarter as well as a trading month as well. Watching JGBs as well. We're pretty much flat here, but certainly there were some minutes that came through from that BOJ meeting. One member did say another rate hike is not desirable, though, so that certainly is one thing to watch as well, and whether we actually see more of that normalization. But that Tonkon survey, upside surprise, BE saying, look, that looks like that could build the case for another hike this year, Belle.
Yeah, and Yvonne, I just want to pick up on what you were saying there about Powell and how he sort of guided these expectations around the outlook for Fed cuts over the coming few months. And Mark Cranfield from our MLive team was making the point that, yeah, maybe you don't even need a 50 basis point cut to come, a 25 basis point cut, given that the US economy is still looking pretty solid. We'll get more of an indication with those jobs figures. But this chart here takes a look at the performance of Asian equities on a quarterly basis. Here we're taking a look at the seasonality function. You can see, or I'll point out to you, but basically in the third quarter here, this is historically, so we're looking at a 10-year average, been a period where we've seen a contraction. So to the magnitude of a drop of around 2.2%, we could expect to have seen on average over the past decade. What was really interesting over these past 3 months is we saw a significant gain, that pop there of 8% coming through. Not only did you have the first part of that period, so we had those expectations around the Fed easing, setting up for a soft landing for the US economy. Of course, over the past couple of weeks, really a lot of these Asian equity advances have been driven by China's stimulus measures. Does that set us up for a solid fourth quarter? Because, again, taking a look at the seasonality function, what we see on a historical basis, typically we'd see Asian equities rising around 4.2% over this period into the end of the year. Again, where do we go from here? It could come down to what's being driven by China. Does this become a global story instead? Let's take a look at some of the best performing stock indexes over the past 3 months as well. Again, it's very much that China theme that comes into play, even though a lot of those gains really just over the past fortnight or so. But all of the top 10 indexes in Asia have been in mainland China and Hong Kong over the past 3 months. The worst performing, actually, Yvonne, have been in Korea. Korean equities are now the cheapest in the region.
Yeah, I mean, people are taking a little bit of, I guess, profits here after that AI trade, certainly, and a lot of that rotation into China, certainly, as you mentioned, right? Because you take a look at just the monthly performance in global equities, and then basically the top 3 markets was 8 shares, Hang Seng, as well as Shanghai Composite. So there you go. how things have really changed and the fortunes have changed in just a matter of a few weeks as well. Let's bring in our next guest, Hebe Chen. She's a market analyst at IG. It's interesting, right? You take a look, Hebe, at this rally. It seems like you're throwing a bit of caution to the wind right now of how far this rally can go. Why?
Well, I think this rally, if we got a bit of the recent history, and you probably quite likely recall what has happened exactly 2 years ago, back in October 22nd, when China surprisingly exited COVID-0 and then pushed up the market like Hang Seng, jumping up about 26% in a month. And that rally lasts roughly about 3 months until the January 23rd, and the market started dropping another 30% in the following 12 months. I do see quite a lot of similarity for that, what has happened in the market last week and the events about 2 years ago. I think they also share quite unexpected high level of a surprise, but also trigger such a huge sentiment in the market of the fear of the missing out. But at this stage, I think in the short term, I do positive that this rally potentially will last after the Chinese reopen from the Golden Week, because the sentiment will continue to bring during this week. But again, what my question is whether or not they could deliver a better result than the event back about 2 years ago. We do seeing that a bit different here is that this rally potentially more driven by the domestic investors, but not the overseas investors. That's really less keen compared to 2 years ago. And a bit deeper in that is whether or not all this support could really tackle the Chinese economy issues. These are all the open questions, and these questions will probably won't answer until we get the next reality checking moment. So that's why I stay a bit cautious. While I'm positive for the near-term look, but in terms of outlook, longer-term outlook, I'm still staying cautious about.
What's going to give you that confidence then? Are there any sort of specific indicators you're looking at? Is it seeing consumption return? Is it seeing better earnings growth? Is it seeing credit demand picking up? What are you looking at in particular?
Well, yes, I think you just pointed a couple of things that the major concern for the Chinese economy, domestic consumption is one. We're probably looking for the inflation figures coming up the 13th of October. Another one is China's Q3 GDP, which will showing that whether or not the 5% target can be met. Another one, I think that we're definitely looking back into the property market. I think the property market, the restrictions, the removal of restrictions for yesterday is so get to the next levels, and whether or not could really move the needle there. I think in the next 2 months or 3, we're checking whether or not the property price can find its bottom or can stabilize. They are all the big pack of the reality checking elements. We definitely need to tick all the boxes before that I can feel full confidence about whether or not this rally or the economy recovery is sustainable.
I mean, yeah, as you mentioned, right? I mean, these gains are just been nothing we've seen in decade or so. 8% gain just one day. You rarely see that in the CSI 300 yesterday, Hebe. So what parts of the market you can still chase in this rally, and what would you actually fade right now?
Well, the part of market, I think that we're coming back. If we are looking for that market to tradable, often we're looking for whether the volatility is one thing. I think that China has given everyone an answer that the volatility, the interest for the market is still quite substantial. So from that sense, you can say it's still a market quite tradable. But if you're looking for the long term, whether or not this is a market investable, that we have looking back into the foundation of this market, whether or not China can find a new pillar of this economy. Previously, we're talking about the technology, the property, the manufacturing, for example, and we all see quite ugly number for all these three pillars for the so far this year. So whether or not we can see a sparkling of the new hope coming from anything else or coming from the recovery side from all these three pillars, I think that's probably the one trigger or one sign that you could get into the market at that stage.
Hebe, are there any external risks that we need to be tracking as well around the Chinese market outlook? For instance, the US election. I mean, we're just a couple of weeks out now from the vote.
Well, definitely, I think U.S. election will have impact for China, particularly for the trading, whether or not they could stop the sliding of China's manufacturing sectors. I think that will be one element, but whether or not they will have a significant impact of that, I think that will be quite minimal. And that's because that the tension between the U.S.-China is not a story anymore. That's something that we have to be experienced for the past 2 years. Whether or not we'll see more curb on China's chip, more curb on Chinese technology. Maybe that's a possibility there. I think in terms of China, the geopolitical tension has always been a cloud above the Chinese market. In terms of China's relationship with Japan, we know that Japan will have the election coming up. China's relationship with Taiwan, they are all sort of big pack of uncertainties that definitely worth keep an eye on.
You've come out with your October outlook. You're saying that we could be seeing some volatility, some turbulence ahead. What are you bracing for this month?
But yes, October, if you're looking for, I'm just taking the USP 500 for reference. If you're looking back about past 70 years in the U.S. history, during the election years, October is often the month with the worst performance, which you can understand from the psychological level because the traders, they're sort of knowing that there's a lot of things unknown and they feel a bit cautious and they're taking a cautious trading strategy. And especially looking pretty recent history in the past 5 election year, the average return for October is a negative 4.4%. So I think this is a month that we know that quite a lot of things that is on the horizon that will potentially impact the market quite significantly. Apart from that, we have the job data coming up. The job data this week, I probably not overemphasize will be the data of the month because that will change not only the Fed's outlook, but also potentially change the result of the U.S. election. So I think at this point of time, the first day of the month, the first day of the quarter, that upcoming 4 weeks won't be an easy setting one, just in my view.
Yeah, let's just reflect a little bit more on that US jobs figure because you are saying it's the most important data set of the month. What are your expectations around how much that influences the Fed? And again, to your point, around the US vote?
Yeah, I think Joe Powell summarized this morning in a very good description for that. He said that the job market is roughly in balance. So which makes me a picture like he's standing on the edge of a cliff and one step towards either direction would make huge difference. I'm particularly looking for the unemployment rate coming on this Friday. I think that either at 4.2% or 4.3% will make a huge difference because the 4.3% will bring back the memory impact in early August. They will potentially revive the discussion about the hard landing, revive the discussion about recession. And that will be a big risk for not just that whether or not they will push up the 50 basis point in November, but potentially will make a market a big pack of the uncertainty and to worry about. And a higher unemployment rate, unexpected cooling economy will also give an extra headache to the Harris to worry about because the ruling party will have more questions to be answered for the economy.
All right, and whether it settles the debate of whether we're going to get another 50 basis point cut by the end of the year. Hebe, thank you so much. Hebe Chen, market analyst at IG, joining us. Coming up, go look at how Shigeru Ishiba might shape Japan's future and his policy priorities as he prepares to become the country's prime minister. This is Bloomberg.
Japan's parliament is set to appoint Shigeru Ishiba as the nation's 65th prime minister. Bloomberg Opinion columnist Gregory says his surprise victory represents a remarkable change. But the Japanese leader needs to map out concrete policies. Gregory joins us now for more. And Gregory, great column that you've got out this morning. And the point that you're sort of making in it is that Japanese leaders who have found success have tended to have strong plans. And you're saying that Shigeru really has anything but, it seems?
Exactly. You think back to, Shinzo Abe when he came into power, he had his 3 arrows. If you think back, further into, Junichiro Koizumi in the early 2000s when he came in promising, ceaseless reform to shake up the stagnation that was going on at the time. These are probably the best remembered prime ministers in Japan certainly in the last couple of decades. And what they had in common was, a clear plan laid out. They obviously didn't get to do everything that they wanted to do, but they clearly had a vision for the country. Ishiba, on the other hand, is much harder to pin down, even though he represents a huge change and a huge sidelining of really the right wing of the LDP. It's very unclear what he stands for. We know what he stands against. He's been opposing, Abenomics and opposing the late Shinzo Abe for, close to a decade now. But what does he actually stand for? He has not outlined this at all certainly in terms of his economic policy for the country. So we're hoping today, as he becomes prime minister, that he'll be able to give us a little bit more of an insight into what, Ishiba's Japan is going to look like.
Yeah, and you mentioned we don't know too much about his foreign policy as well, and I think some political experts have said that could be a challenge for him. He's talked about an Asian NATO, which you say no one has asked for. He's talked about U.S. politics and the relationship that U.S. and Japan should have, and also maybe more importantly, what relationship Japan should have with China. Do we know anything on his position on that?
He's quite circumspect about it. I mean, Ishiba is known as a defense wonk, and he is very, he's quite well known in those circles. But he also talks about, moving Japan into sort of, I guess the way to interpret it would be sort of more of a centrist position between the U.S. and China. He wants, obviously he wants the alliance with the U.S. to continue, but he wants Japan to be a more equal partner. That's all good in those terms, but in terms of renegotiating the, status of forces agreement between the U.S. and Japan, that is going to be a huge challenge, regardless of who is the president come next year. In terms of China, he talks hawkishly, but he also talks very pragmatically. He wants to have negotiation, with China. He wants to have active negotiations with China. And it's quite unclear where he wants Japan to be as an actor in between those two countries. It seems to me that he wants to move Japan to sort of a more sort of aloof position in between those two countries. But as I say, he hasn't been very clear about what it is that he actually is trying to do.
Garode, how far do you think his image carries him? Because Ishiba, to your point, seems to be someone that has endeared himself to many in the public for a down-to-earth approach. In a time where we're seeing the US election increasingly looking like a popularity contest, do we see something similar in Japan, and does that give him a little bit more breathing room then to try and spell out some policies?
Well, we're about to find out. I think Ishiba has for a long time consistently polled as the person that most people want to see as, the next prime minister. Now, is that because they like him and his policies? Like I say, he is quite a likable person. He is quite affable. He's down to earth. He is not afraid to poke fun at himself. So he can come across as a very sort of likable person. But is it his policies that they actually like? The LDP is recovering from, or trying to recover, shall we say, from, these two huge scandals that have dogged the party over the past several years. When Ishiba is actually in power, rather than being the person who is the proxy for being on the outside, being the anti-Abe, when voters are confronted with who he is and what he wants to do, assuming he actually tells us what he wants to do, are they going to continue to like him as much? That's what we're about to find out, because he's already announced that he is going to call an election on October 27th. That is, to kind of preempt the main opposition party, which is just elected its own new leader and is kind of getting a bit of breath of fresh air through that. We'll see in terms of what his goal for the election is and how much of a margin of victory he gets. It's almost certain that the LDP will certainly win the election, but what is the margin of victory? Do they gain or lose seats compared to what they have now? That will determine, I think, a lot of where Ishiba goes from here.
Garode, thank you. We're already there. Our Bloomberg Opinion columnists debating whether this is the step in the right direction for Japan today. And speaking of elections, tune in tomorrow for a special coverage of the U.S. vice presidential debate. That's between Republican Senator J.D. Vance and the Democratic nominee, Minnesota Governor Tim Walz.
Yeah, the U.S. election is also the focus of our big take today, with some forecasts for America's economic future under a Harris presidency or a second Trump term. Subscribers can find that story on the terminal. The function is NI Big Take or at Bloomberg.com. We'll have more ahead. This is Bloomberg.
2 billion domestic trips going to be made during that 5-day holiday beginning, and up more than 19% from the same period from those pre-pandemic levels back in 2019. Our chief North Asia correspondent Stephen Engel looks at whether the new stimulus measures will also give the retail sector a much-needed shot in the arm.
Now that China's delivered bags of pro-growth goodies for its struggling economy, the question now is, will reluctant consumers take the stimulus bait and shop, or continue to lie flat and hold back over this week-long National Day holiday?
If you look at the holiday data, right, so consumption data, high-frequency data, they are okay in the past holidays, particularly in terms of the number of people traveling. But if you look at the consumption, so per traveler consumption data is not very strong, right? So people still travel, but they spend less.
No doubt, a stimulus-juiced stock market, lowered borrowing costs, relaxed home buying rules, and rare cash handouts to some and subsidies for jobless new graduates do help. But do they adequately address demand shortfalls and longer-term structural issues?
It's not enough to change the whole economic dynamic yet. Domestic demand or anything stimulating the consumption side remains absent.
Simply put,
the Chinese consumer is becoming much more value conscious.
And that's being felt across the economy, including in the hospitality sector. Global resort chain Club Med, owned by China's Fosun Group, says it needs to find new experiences to attract price-sensitive guests.
If we're talking about doubling the price but deliver the same service as before in the peak seasons, people don't buy in. They want a price value on that. Yeah. So simply raise the price doesn't work anymore. So we need to think about a new product.
Like bringing the Alps indoors to a massive facility tied to a Club Med an hour outside of China's financial capital.
Never did I ever expect to ski in Shanghai.
Opened less than a year ago, it's one of the largest indoor ski and boarding slopes in an otherwise flat coastal eastern China.
Following the Beijing Winter Olympics, winter sports are increasingly popular. This is a 91,000 square meter facility, and as you can see, there's no shortage of customers, even though the price tag is not cheap. You have the Club Med next door, so one night room in the hotel plus 1 day skiing is about $360 US. Not cheap, but it does offer year-round outdoor leisure sports. Well, actually, indoor.
The growing trend is to prioritize spending on activities.
That's true.
Yes, buying stuff and clothing is more expensive.
Some experience-related consumptions, partially also related to travel. So like outdoor spending, outdoor apparel, even it's super expensive, but selected brands are still doing really well.
Like the newbies on the bunny slopes, consumer caution is perhaps warranted when the economy is, well, going downhill. We'll see if an avalanche of stimulus and nerve get the mojo flowing again.
It's all about confidence. It's all about confidence.
Stephen Engel, Bloomberg News, Jiangsu Province, China.
All right, Golden Week, as we said, underway. You were actually just sharing to me some of your top travel picks, but we can go a bit more broader here, talk about the top destinations for Golden Week for Chinese travelers. And actually, some of them are pretty far-flung destinations. A lot of people planning trips to Europe, and the places they're looking at, Istanbul, London, Moscow made it, Milan, Dubai, Melbourne, for instance. Actually, a slight contraction to Melbourne. Okay, not as many people want to go there, but...
Well, look at Paris.
Yeah.
A drop in demand.
Maybe it's post-Olympics. Enough people went there during the Olympics. They're not interested in
kind
going
of like
now.
Been there, done that. I want to go to more edgier places. But yeah, it seems like Turkey made the top spot. You look at where they are regionally, it's interesting. KL, you're seeing 142% surge since 2019. I think there was a lot of visa-free initiatives. Yeah. Hong Kong, Macau also making it to the top 3 as well. And Japan kind of making it a bit lower there. I guess people are done over tourism maybe there in Japan.
I guess that could be sort of playing into it. But yeah, certainly, as we say, really watching Golden Week. What do we get in terms of consumption and how much are people actually spending? We want to see people pulling out their wallets, and that drives the equity rally further.